I'm Michael Fox, and this is the Prospector Podcast. And I am joining me today. I have Joe Kizis, who is the president and CEO of Bravada Gold. Welcome, Joe.
Well, thanks for having me again, Michael.
Oh, it's always a pleasure to have you. I find this particular project particularly interesting because of where it's located, and it has different kinds of economics than other projects that we look at. So before we get into the meat of this discussion, let's give everybody an overview of what Bravada Gold is.
Sure. So Bravada Gold is one of the companies in the Manix group, and our focus is on gold and silver, and specifically on gold and silver projects in Nevada. A great place to find gold, and there's lots of it there. There's lots of advantages in working there. It's a pretty simple place to work compared to other parts of the world. So that's why we put together a company specifically to do that exploration for those elements in that particular area. So our focus, again, not focus, but our emphasis is on earlier stage projects. We do take things forward, and the idea is that we will bring those to either a partner or a sale with a company that's actually a miner. So our focus is on that early part of the curve that shows exploration growth, and then pass it on before it drops off to the early stage development, early mining stages. So we have 9 projects right now. Our most advanced project we'll talk about quite a bit here this morning. So that's the Wind Mountain project in northwestern Nevada. And then we have other projects scattered about, and we'll talk about those maybe briefly if you get a chance.
Yeah, no, that'd be great. What I like about where you guys are in Nevada is that it's an opportunity for lower grade projects to be profitable because the nature of the ore in the ground allows for heap leaching, which is low cost. And for a lot of companies, it makes things feasible for much lower gold prices than regular mining does. So let's talk about Wind Mountain. You guys did a PEA. If I remember correctly, the PEA was based at 1750 gold. We're a far cry from that now. We're on the upside, but there was an economic case to be made at 1750 to mine this project economically.
Yeah. So the reason that of course, mines go into production is because that they're profitable. So it's really the margin between mining costs and then whatever revenue you get from that. So with Nevada, there are a number of deposits that are called oxide gold deposits, and those are typically disseminated through the rocks. So they're large dirt moving activities. But the reason that they have such a good margin is that it's very inexpensive to take that material in kind of an open pit operation, put it on some plastic basically, and then leach it with a dilute cyanide solution. And so that's a very, very inexpensive way of producing gold. And so that means that converts into a lower cutoff grade and lower overall deposit grade to become economic. So in the case of our Wind Mountain project, it's in a desert area of northwestern Nevada. The groundwater is fairly deep, and there's a big zone of oxidation above that groundwater, and that means that any gold that's in that near surface area has been oxidized essentially, completely. A little bit towards the bottom, you'll get a transition into more difficult to leach material. So what we did with Wind Mountain, it's a past producing mine. They produce maybe around a little bit less than 500,000 ounces of gold and 1.2 million ounces of silver, if I recall correctly. And that was by Amax Gold back in the 1990s. And so we looked at it with the idea of finding high-grade feeder zone. We didn't really find a specific high-grade feeder zone that would support a mine, but we did find a lot more of the low-grade oxide gold that would be amenable to heap leaching after open pit mining. So in 2022, we decided that we would take a look at a best case scenario or what you might call a starter pit. I called it the phase one because I knew that there were, if it's profitable, there would be additional phases. So with that was the one that we did at 1750 gold and $21 silver. That was quite profitable. And the reason that we call it a starter pit or first phase program is that there was a small area immediately adjacent to where the ore body sticks out of the ground on the side of the hill. There's a kind of a flat area. And on the far side of it, that kind of constrains it, there's a large power line that brings power from the Bonneville hydropower plant and brings it to Los Angeles. So, I mean, it makes your hair stand up if it's running when you walk under it. So, it's not something that you can economically move easily. So our thought was, okay, how much can we fit into this little narrow space? It was about 30 million tons. And that was what we did the PEA on, and it was quite profitable. We had very good economics based on that, something like a 38% internal rate of return, producing gold at a little over $1,000, all in sustaining less than $1,200. So that was then. We did not end up mining because of the constraint all of the in-pit resource that was identified, and those were at the indicated and inferred, mostly in indicated category. So that's fairly well drilled out material, more so than say an indicated or inferred resource would be. We looked at, is there another place that's pretty close by that we could do as a second pad? We found one. We had the kind of the initial economics, and it looked pretty good. And so our thought was that now that gold prices have gone up significantly, we can apply a higher price for our economic models. So the way we get an independent group to look at what price do you use? Well, typically for a PEA, you would use the 3-year trailing average, and for a pre-feasibility, probably about the same. So that 1750 now is almost what, $4,000 a week or two ago. So the 3-year trailing average is now $2,400 and 2850 silver. So the economics look quite a bit better for two reasons. One, the price going up. Well, we didn't have anything to do with that, but we did find a second pad, and we have something to do with that, right? So that's why it made sense to do a new resource. And in fact, the idea was to bring it to a pre-feasibility. So the pre-feasibility is kind of a long process. The first step in that is to redo the resource at different prices, and that's what we've done right now. So we've had a pretty good response from that. The indicated category, again, that's the highest quality that we have at Wind Mountain. We increased by 15% for gold and 20% for silver. Inferred, which I'll talk about in a moment, was up quite a bit more than that, over 290% for gold and 490% for silver. And the reason that that kicked up so high is that a lot of the waste material, because of the cutoff that we use to bring the best ore to a small pad, has been removed by having a second pad. So when you open that up and say, okay, that material that sat above that we were going to stick into a stockpile somewhere and think about someday down the road, you would apply that directly to a heap leach site. It's the difference between, do you make money if you pick up that ton of waste, quotes, and send it to a waste pile, or do you pick up that as ore, in quotes, and send that to a leach pad? If it makes money, then you send it to the leach pad, and if it doesn't, it goes to a waste pile.
Yeah,
So
that's
that's
something that a lot of people actually overlook when they take a look at rising commodity prices such as gold and the silver price is that there's not only does it improve the profit and loss statement on the ore that was planned, but it does cause a recalculation of the resource estimate itself because there, as you say, there was a lot of material that was headed for the waste pile that is now economic at the higher prices to move. So not only are you getting a wider profit margin out of this, but you're actually getting more resource out of the process as well because of that.
right. So, part of the thing that you like to do too is to make sure that your mining starts with the best ore and maybe put some of that lower grade material farther down the road because you have capital costs, you want to pay those down as quickly as possible. So the ideal thing that we have at Wind Mountain, the circumstance is that some of our best ore is basically sticking out of the ground. And so that goes to pad one first still. And so the first year, no matter what, whether we put it on the one of the part of the heap leach or put it onto a waste pile somewhere, you're getting that higher grade material right away. So yeah, it's got a lot of things going for it that, a low grade deposit and, in other parts of the world and in Canada or something, if it weren't oxidized, it wouldn't make any money. It wouldn't make money if you have to, go through a more complicated mining scenario. But open pit in a desert area where there's not a lot of conflict with operations. Our only neighbors in the valley there's a big ranch that produces alfalfa, and that's on the far side of the valley. And south of us, there's a power plant, a geothermal power plant. So it's a nice industrial part of the state, and yet it's only an hour and a half or hour 40-minute drive from Reno.
Yeah, convenience, 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 and location, location, location. A lot of times mining is very much similar to real estate. So,
Mhm.
where are we right now in the process? You guys just raised some money.
Mhm.
You're wanting to use that to move to this pre-feasibility. I guess the first step, if I understand it correctly from the discussion we've had so far, the first step would be to reduce or reproduce a resource estimate for Wind Mountain. Is that correct?
Yeah. Yeah, and that's what we did. We put that news release out on September 9th of this year. So yeah, it's kind of hot off the presses still. Maybe a little more than a month old. So the next step beyond that, then there's a number of things that we need to start looking at, like updating the archaeology that we had done 11 years ago. We have to update that. Same thing with uh, the biology, if there are any new species that could be a problem. We don't think there will be. There's some hydrology. These are a lot of studies. What we'll try to do is get the ones that have a long lead time done first. And then there's always a little bit more metallurgy that the engineers like to see. So we have some of that scheduled. So yeah, there's some geotechnical work that will need to be done because, back when it was mined, you can walk into the pit now and everything is nice and solid and safe. But, because of some of the pretty, horrific disasters that have happened in mining, waste piles that collapse, killing people, or dams that break loose and, destroy houses and, injure people. So, there's a lot more regulation on geotechnical work, and so very little of that was done previously when AMAX was mining it. So there'll be some work there. But a lot of the drilling that we've done so far is pretty tight, so the resource is pretty solid at this point. And we have exploration targets. Our thought is that those are things we start worrying about after the first 5 years when we start marching towards our, 10-year mine life. If you take the amount of production that was originally designed for Wind Mountain during the PEA, it's about 50,000 ounces a year. It's not a huge amount of production. So, a lot of the majors would not be interested, but a lot of the smaller miners, that's a pretty good, that's a pretty good mining rate. The uh, the thing with the initial 30 million tons is you only have about 6 years of mining for that. And so our intention is to get it up to about a 10-year mine life. And then we start thinking about, what happens in years, the later years. Well, we have areas where there's mineralization very close to the surface. We haven't drilled it out just because, we're really not looking to spend money on things that are going to come into the mine life at years 5, 6, 7, 8, 9, 10, right? So yeah. So there's lots more that can be done. But at this point, we're going to move this forward, basically de-risk it to the production decision, which you can do with a pre-feasibility. If you're going to go get financing, then you probably have to upgrade that to a feasibility study.
When will the feasibility for Wind Mountain be complete, estimation
Uh,
wise?
yeah, the pre-feasibility, it's probably 18 to 24 months to go through that process to get everything all the reports done and some of the studies. Some of the studies are going to take longer. Hydrology, there's, typically they want to have monitoring for, 12 months, something like that. Maybe not here because, it had been previously mined and there were monitor wells. So again, we have to start working our way through the various tick marks that we have to check.
Yeah. Normally, that would cause the company to be quiet and work through this whole process. But as you mentioned earlier, you are a different company. Wind Mountain is one of 9 potential projects that you have in the Nevada area. What are the other projects, and where are they at, and what type of work needs to be done on them?
Yeah, well, we have like I said, there's a good portfolio and they're in various stages. We've tended to work on things to bring it forward to the drilling stage. So one of the more advanced projects we have right now is our Highland project, and we have some very nice targets there. It's been tough to raise money over the last few years, so we haven't drilled those yet, but they're permittable. In fact, we had a permit in place for initial round. We've had historic drilling and we've done some drilling ourselves on that project in the past, and I've had some pretty spectacular intercepts. So, we have a couple of areas where we think that maybe that's just leakage and not necessarily the best part of the system. We have our geologic reasons for thinking that, and it'll take a drill rig to test those ideas. We have other projects that are, we have one that's a joint venture. That's a similar type of project, not too far away from our Highland project, and that's a joint venture with Endeavor Silver. They have a larger property position, so our targets on our Baxter project, really complement what they're doing on and plan to do on the project that they have called the Bruner District. We have a new project. We're always on the lookout for something that's pretty exciting. Uh, One of the areas that's really hot right now is part of the Walker Lane, in the area because of the discovery that Anglo Gold Shante has made at Silicon and adjacent mineralization at Merlin. That the combined mineralization there is I think it's just under 14 million ounces. So a tremendously large deposit. It's part of a district with lots of gold deposits surround it. Those are typically a lot smaller, but still many of them in the million plus range. So the other area that we think is very similar to that, and in fact, Ashanti, AngloGold Ashanti is a neighbor of ours on our new project, which we call East Walker. East of the valley, there's a mine that's being reactivated called um, the Borealis mine to the south. That's about 1 million ounces there. To the south of us is the old Aurora mine, which produced 2 million ounces. Hecla Gold has that now, and they have some pretty interesting targets that they're expecting and hoping to find additional mineralization. A little bit farther south of that is a new discovery called that a company called Headwater Gold, and now Newmont is earning a big position of, and that's called Spring Peak. And they have some other targets in the area that are looking pretty positive as well. So it's a hot part of the area. We have some historic drilling on one portion of that project that has some pretty strong gold numbers. Just a little backup on one of the reasons I like that particular project is that in most of these very high grade vein systems, and silicon and Merlin is sort of an example of that as well. You get these spectacular zones deep, and basically when the fluids are moving to the paleo surface when they first formed, the ground where they came to the surface looked a lot like what Yellowstone looks like today. And so on the fluid pathway from some depth, they're carrying gold, hot, salty solution. It cools, changes chemically, gold drops out at a certain level, and then the fluids continue on to the surface, and you get those features like geysers and center pools and that sort of thing. They don't have any gold in them. And in the past, we've kind of ignored those kind of areas that said, that we said, well, look, this looks like Yellowstone, but there's no gold here, so nobody drilled it. Well, that's exactly what happened at Silicon is, you see those features that you see at the paleo surface, but there really is no gold. It's about 200, 250 meters below the surface where you start picking up the gold. Other deposits, you may get it up, higher than that, 150 meters. But on this particular project, where we see those same features of the shallow Yellowstone-like, features, um, there's no gold at the surface. A little bit here and there. Some of the pathfinder metals are there, but there's been no drilling below maybe 125 meters. And we need to go, 150 to 200 meters before we start seeing the gold. And on the northwest end of the property, you go down a big canyon, and the gold actually comes close to the surface, and there's just one drill hole there and a few others nearby that hit a structure that had some pretty high gold values, like 30 meters of over a gram, which is a pretty nice geochem anomaly if you're looking for high grade. So, you've got to be pretty close. So we think we understand the structures. We're trying to put together some mapping that we haven't quite done yet. We've done some preliminary recon mapping. We've just added some claims. We've almost doubled the land position recently. So there's some news flow that we'll be putting out eventually. Just, okay, well, we're still active and we're doing work, and this is what we're doing. We're trying to accumulate a decent enough, large enough land package to make it a mining property.
Question about the Yellowstone type of topography. So, if my understanding is that that would have been a very active volcanic area like Yellowstone is today, is it possible that below all of that, because of the high heat, there could be large or deposits of gold down there of higher grade because of the nature of the volcanic reactionary system that's there is similar to Yellowstone. It's kind of more of the actual Caldoran, I think. Caldoran.
Yeah,
Thank
yeah,
you. I
Caldera. Mhm.
Yeah, I was trying to spit that out of my mouth and it wasn't working very well. But is that a possibility, or is that not feasible?
I'd be really surprised if there's not gold being deposited underneath Yellowstone right now. Yellowstone, because of the plate movements in the area, it used to be farther west. In fact, it may well be that parts of just north of Wind Mountain, uh, Yellowstone would be occurring at a certain time. Now, as the plate moved over that, that migrated to the east. So there are other gold deposits that are, you know, formed by probably that same hotspot. Like I said, there are certain things, there's been some really good studies in the last, 10, 20 years that show what the tops of these systems look like. And it makes sense, I mean, a fluid that's migrating, like porphyry coppers, there's an area where moly is dropping out. There's an area that is where copper is dropping out, and so on and so on. So the same thing you would think about this, at some point those fluids don't have any more gold in them. They dropped it all off somewhere. So the trick is, can you tell where what the chemistry is like? Is there gold anywhere? Well, that drill hole on the northwest side of our new project, East Walker, tells us that this is a gold-bearing system. And in fact, there's some other areas deeper in the erosional sequence where you see some decent gold. And the area that we're most interested in is where it is on the surface, because it's a big system. And that's the other thing that you want to see. A lot of deposits develop their grade as pulses. So you get a pulse, maybe an earthquake, opens up the fault, it seals up, pressure builds, eventually it breaks the surface. You have another pulse. When gold bearing fluids boil, they can't really easily carry gold, so they drop it out. So you get these nice banded veins that are rich in the metals. And, when the fluid goes up closer to the paleo surface, continues on up towards what would be Yellowstone, there's no more gold. Sometimes you do, you get a little squirt and you'll find a little gold in it, but that's not where you're going to find the deposits. It is going to be some level down where you get periodic breaking and boiling, systematic boiling. And there are textures that show you that. So I'm actually giving a talk here at the AEMA conference in December on our Highland project, because this is a good example of where we have a lot of the fossil features of Yellowstone at surface there. And we have, excuse me, we have a number of little areas where some of the squirts have come to the surface. So we have up to 11, 15 grams. This is a gold bearing system. It's a big system. It's a big area. Where is the hot spot where, the high grade gold is? And maybe it doesn't exist, but, it's still a challenging thing. We've got geophysics. We've done, lots of things to tell us where we are in the system. That's an exciting project. Our Baxter project's the same thing. We have center at the surface. We do have some gold uh, in a different part of the district where you're seeing a little deeper into, below what would have been the Yellowstone type alteration. So yeah, it's pretty exciting.
Yeah, no, lots of opportunity and lots of work still to come with Bravada.
Mhm.
If people want to keep to follow this story as it continues to roll out and moves through all the various projects, how they do so, Joe?
Yeah, well, we're on the TSX as BVA. We're also in Stuttgart, the BRTN. You can go on to our website, bravadagold.com. There is a drone video that we put together for Wind Mountain. That was after our first PEA. And anybody that's interested, it's a pretty interesting view. So we zoom in from basically space, take a look around the project, see the different features, and it gives you a really good idea. It's funny because I presented to some investors that we have in Boston, and they just couldn't believe that there was nobody out there. It's such a wide open space. They just, there's just not that sparsity of people on the East Coast. So pretty interesting.
Yeah, for sure. Thank you very much for your time, Joe, and I look forward to having you on again as these projects roll out.
Well, thanks for having me, Michael.
Bravada Gold is a paid sponsor of the Prospector News. The host owns shares and warrants in Bravada Gold bought at the market for investment purposes. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.